I think the reason they're buying from the West is that they know that the West has a debt problem and they have a gold problem as well. Like the big bullion banks have big shorts that they orchestrate through the paper market. And if they take the physical out of the West, it's going to be harder and harder for the West to keep the gold price in check. And a gold price in check, of course, is positive for the dollar. If the gold price goes up versus the fiat dollar, it means that the dollar is going down. Ultimately, the dollar can only be debased or devalued or even revalued higher versus gold.
China played a pivotal role in the gold market in 2024 as consumer demand and central bank purchases drove prices to record highs in the year's first half. A slowdown in the year's second half, as the People's Bank of China paused purchases for 6 months and a sharp drop in gold imports occurred, hasn't derailed the nation's influence in the precious metals market. Renowned financial expert Mario Innecco highlights China's strategic gold accumulation, noting that the Pboc stopped announcing gold reserve increases in May. However, researcher Jan Nieuwenhuijs revealed customs data showing China imported significant gold from London in September and October. Based on fundamentals, Innecco mentions that Nieuwenhuijs estimates an additional 1,000 tons since 2022, totaling around 5,000 tons. While 99% of the media keeps staring at official data by the Chinese central bank, misleadingly stating it added 5 tons of gold in November following a supposed 6-month pause. The Pboc's unreported purchases in London accounted for a stunning 60 tons in September and another 55 tons in October. According to Innecco, China's gold purchases target Western vulnerabilities in suppressing prices through paper gold shorts. He highlights that rising gold prices undermine the US dollar, reflecting gold's historical counterbalance to fiat currencies. In fact, the value of gold is far higher today, at over 5,000%. That highlights that the more value the dollar loses, the more value gold gains. While reflecting on the market, Innecco predicts China's disclosure of its true gold reserves could weaken the dollar and bolster its global power, underscoring the saying, "He who has the gold makes the rules." Now we present the clips of Mario Innecco's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
The Chinese central bank, the Pboc, they had announced in May that they didn't increase their gold reserves, which they had been announcing for a while every month that they were increasing. And of course, the mainstream media jumped on that and said, yeah, gold is finished. The Chinese have stopped buying now. But Jan Nieuwenhuijs, who does very good research on gold, he covered back then that he was seeing through the custom moves data that China was importing gold from London, a lot of gold, like around 60 tons in September and October. And that's despite the fact that the Shanghai price had actually a little discount to the London price. But I think the reason they're buying from the West is that they know that the West has a debt problem and they have a gold problem as well. Like the big bullion banks have big shorts that they orchestrate through the paper market. And if they take the physical out of the West, it's going to be harder and harder for the West to keep the gold price in check. And a gold price in check, of course, is positive for the dollar because the flip side of the dollar, of course, is gold. If you don't know, up until 1933, the dollar was a fixed weight of gold. That's all it was. And the currency was just a promise to pay in gold. So if the gold price goes up versus the fiat dollar, it means that the dollar is going down. Ultimately, the dollar can only be debased or devalued or even revalued higher versus gold because the other fiat currencies are just a derivative of the dollar and they're going to inflate or deflate. They'll follow the Fed, right? So back in November, Jan Nieuwenhuijs noted that they were secretly buying a lot of gold, right? And a few weeks later, or a week or so ago, maybe a little longer, Goldman Sachs caught on to Jan's article, and they did their own research, and they came out with it. And lately, though, Jan Nieuwenhuijs has come out with another article on Christmas Eve, December 24th, and he says China secretly snaps up more gold, positions for its greater global role. And yeah, it's going to continue. If you want to be the world power, and I think China will be the world power, not the West anymore. Not that I am cheering for that, but it's just the way things go. Empires don't last forever. You have to have the gold. He who has the gold makes the rules, so the saying goes. But what he's saying here, he's done some more research, and he thinks China has been buying a lot of gold on the quiet, that he's done a lot of research of the gold that's coming through from London, but he thinks there's a lot more coming from other gold centers, maybe like Dubai. And ever since the war in Ukraine kicked off, or the special military operation in February of 2022, he argues that China has actually added 1,000 tons of gold, and that they have more like 5,000 tons instead of the 2,300 tons that they officially say they have. Yes, and I know there are a lot of other researchers in gold, like Alasdair Macleod and others, that have looked at the data and the mine production of gold in China for the last 25 years, which never leaves the country. And they come to the conclusion that the Chinese, and that includes, I guess, the Pboc, all the state-owned enterprises, and the public, they own more like 32,000 metric tons. And I think that is highly possible. But the thing is, the Chinese want to keep that quiet, of course. Maybe one day they will come out and say we have a lot more gold. And that will be, I think, very negative for the dollar.
In his analysis, Mario Innecco underscores the Federal Reserve Chair Jerome Powell's recent comparison of gold and Bitcoin as speculative assets, framing them as competitors rather than threats to the US dollar. Innecco critiques this view, suggesting Powell either misunderstands gold's importance or aims to divert attention from it, particularly as foreign nations like China continue to value gold's strategic role. Earlier this month, the Fed reined in the rate cuts expected in 2025, as Chair Jerome Powell made clear that the central bank needs to see price pressures ease further. Lower borrowing costs are typically positive for the precious metal, which doesn't pay interest. Bullion has hit successive records this year and is set to close in 2024, which is more than 25% higher. Prices have been lifted by U.S. monetary easing, safe haven demand, and central bank buying, but the rally has recently slowed as the dollar strengthened after Donald Trump's election. He also discusses the declining value of the dollar against currencies. Lastly, he reiterates his long-term investment in gold and silver, emphasizing the eventual collapse of fiat currency systems, including the dollar. Let's get back to the interview.
If you remember recently, Jay Powell, who's the head of the Federal Reserve, the most important central bank in the world, he said that gold and Bitcoin were the same, speculative, that the real competition was between gold and Bitcoin, as if the dollar was king. And it shows to me that he's clueless, or he's trying to keep people away from gold. But I don't think the Chinese or a lot of other foreign countries or officials have been fooled by Jay Powell. Maybe the general public in the US and the West will be fooled to think that the dollar is king, really. I mean, I'm here in Switzerland, and I remember when I was a lot younger here in Switzerland that you could get over 2 francs for a dollar. Now you get less than a franc. And talking about that, the exchange rate, I'm hearing anecdotal evidence that a lot of Americans are coming to ski in Switzerland, mainly because it's much cheaper. The ski lifts here for a day here, you pay about 80 francs. But in places like Colorado, Aspen, or Vail, or whatever, you're paying $300 a day to have a ticket for skiing, for the ski lift. And apparently one of the reasons is because a lot of the big corporations own everything in these ski resorts in the US. I might be wrong, but that's what I've been told. But here in Switzerland, things are more owned by the local people, not controlled by big corporations. Maybe that's the reason. But anyway, that's a different topic. So yes, we are like the little plankton following the big whale, in my opinion, with gold and China. Is it the reason why I try to stack gold and as much as possible in silver? No, but it shows you what's happening. The reason why I've been insuring my savings with gold and silver since early 2000s is that I know that a fiat currency system, especially one in which the major reserve currency is a fiat currency, and it's never happened before, will ultimately end in tears and go to zero, because that's what all fiat currencies do, and the dollar included.
In addition to dollar weaponization, the global debt overhang is a motive for central banks to increase their gold reserves, as historically inflation is the most common big way of restructuring debts. Do you think China's gold strategy could redefine the balance of global financial power, or will the US dollar maintain its supremacy despite these challenges? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.